TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow up 123, Nasdaq up 47, S&P's up 42. They were just up 60, and they were also just down 4, folks. This is a replay of 1998, the Asian contagion. What you had is they had Greenspan and Rubin come out. They reduced interest rates by a half a point. Market took off. It's going to be a wild day out here. Gold contract up $25, trading at $16.20. You got silver up 28 cents, $16.96. Notes and bonds. You got the 10-year down 6 ticks, 135.02. The 30 off a point plus 8 ticks at 170.31. And King Dollar down 155 ticks, trading out here at 97.217, euro at 111, yen at 107.5, and the pound at 128 to 1 U.S. dollar. How do you like that, Tom O'Brien?
Boy, that changed things quickly, didn't it?
Oh, my God. I'm telling you, man. This is just a replay, folks, from 1998. And let's go over to our man, Mr. Kevin Hincks, because Kevin Hincks was definitely around in 1998. He was in those pits. And I suspect the way that in every trading day, folks, great program. Kevin and his team, 11 to 12 Eastern Standard Time. You want to understand option strategies, futures, all of the above. Check it out. I think Kevin's got to close one half of that iron condor yesterday because he went out with those calls, and those calls got to be worth some money. Kevin Hincks, what's going on?
Good morning, Tom. Good morning, Tommy. Well, you know, this seems not normal for the environment that we're in and the past, like you said, 21 years. 22 years. But this is how they used to do it all the time.
Right.
You'd look up from the trading pit, go, all right, something just happened.
Exactly.
And then the announcement would hit. And that's kind of what you saw here. So really incredible. But this is Jerome Powell doing what he said. He said he would closely monitor these markets and use all appropriate tools. Well, guess what? Short-term interest rates, these are the appropriate tools, and he used them.
Yes. Hey, you know, let me ask you, right? Tommy and I were talking about this yesterday, and you guys were talking about it on the air also, 11 to 12. It's so interesting. I mean, the VIX is only at 33 right now. And we've been moving more than the formula. I mean, up and down. It's like, okay, so it's kind of out of whack a little. I mean, it seems like it should be a little bit higher, right?
Well, based on, a 32 VIX implies a 2% move a third of the day.
Right.
So the fact that we're getting those every day implies that, things should or could drift higher. Remember, it got up to 45.
Yes.
So on the upside, they're always going to take a little some numbers out of the VIX. But I definitely expect them to hold in these levels as long as you get, the misconception, Tom, is that VIX goes up on the downside, it goes down on the upside. But that's really not how you measure volatility. Volatility is in either direction.
Sure.
And if it's moving 2%, on the upside as well, sure, you'll see a little bit of gravity come into the VIX contract, but that's not going to really do too much damage when they're moving those bigger percentages. Volatility is going to hang around for a while, for sure.
Yeah, no, you can't. It's this is just pretty amazing, man. There's no doubt. I'm sure there's plenty of people that haven't seen something like this, because folks, when Greenspan and Rubin did it, they did it at 3:15. I think it was. I know it was 1998 because the Asian contagion, and they did it at 3:15, and I think the market moved like 500 Dow points, and 500 Dow points in 1994, folks. Okay, 1998 rather was that's just a crazy move, But this is pretty impressive.
This market surged when they announced, and then consolidated for a little bit to catch its breath. But based on what they did, remember yesterday was kind of like that too. Mid morning, the market kind of hesitated and paused, and then took off in the afternoon. If they don't consolidate, if this market stays here, it's going to gain momentum the rest of the day. Even though I say this as the E-minis are up 48 points, this market is still considerably far off of its highs. So Could be an interesting day.
You bring up a great point, because the number, if on these E-minis, folks, you better watch 3,100 like a heartbeat, man. Because if you get back under that zone, it's not good. That's, it's like, okay, you have it happening in a monster way, but you don't want to get back underneath that. So, and I mean, the virus in itself is what it is, right? I mean, we all can protect ourselves, and this is a cash flow for companies. I mean, that's the bottom line when we talk finance, right?
Right, Tom. What it is uncertainty is surrounding these markets.
Yes,
and that's what's causing this all. The facts about the coronavirus in the U.S. are pretty tame, pretty minuscule. No one. If anyone passes away, that's a tragedy.
Yes.
But if you look at this from a totality, the numbers are tiny in terms of people being affected. 100 people, I mean, there's 300 million Americans.
Right.
Now, the fear is the spread, and the fear is that it can spread to countries where they don't have the resources like China and the U.S. does to battle it. I think that's some of the risk in the markets. I think that's why when it hit Italy, that there was some real uncertainty in the market that day. But, I think the news out of China is pretty positive in terms of the growth is subsiding and factories are starting to go back to work. I think there's a lot of good news there. But still, uncertainty grips the market. The only consistent thing that we can say history-wise is these are temporary. They're always temporary.
It's amazing, too, folks, is that if you look at Wuhan, what you're going to see is that it's getting smoggy again, okay? So this is really cool. We all have these different types of tools, right, to look at what's going on. Well, what happens, folks, there's so many factories there that it's normally always like gray. And when they shut down, guess what? You can actually see the blue sky again, and now they're getting gray again. So there are factories that are coming back to work, but what a way to look at the world, right, Kevin, to see whether we're going back to work or not. It's like, do we have smog or not, right? Pretty amazing.
Yeah, exactly. It's kind of, Americans don't really understand China in general. Some people do some work on it. Some people understand it more than others, but most Americans don't. They just don't understand. Right. And that uncertainty, I think, is what's causing problems here in this market. That's just my call on that. So, I mean, look at E-minis are now only up 25.
I know.
Being up 55.
That's heavy business, man. I mean, and this is, it's, and I've said this many times, this is what's cool, folks, okay? You don't have to get upset or mad or, happy or glad with this market. No matter how much you know about the markets, going through a market like this is really cool, because that is what gets you real experience, which is cool. Do you know what I mean? Because you can't teach this, Kevin, right? It's like, okay, when you're through it, though, it's cool, man. I mean, everyone can have their own, yeah.
There is no undergraduate or graduate class that teaches you, maybe you fade a little up here when it goes up 55, or maybe you buy the dip, or what you pay attention to. There's no class that teaches you that.
No, there is not. There's not. But guess what? We have the best option class in the world right here, coming up 45 minutes from now. Folks, Tommy and I talk about a lot. Defined risk, you better have defined risk in this marketplace, folks. Check it out. Kevin, you have a great one, safe one. We look forward to the show in 45 minutes.
Thanks for having me on, guys.
Thank you. Hold on for the ride, folks. Tommy and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 120, NASDAQ down 20, S&P's up 14.5. So what do you think, Tom O'Brien?
Boy, pretty remarkable that on the front page of CNBC, I know futures technically up right now, but markets technically down. You have red for the indices, and we just got a 50 basis point cut. Not bad.
That's pretty intense, folks.
It is pretty intense. You could say that it was basically, maybe that was the run yesterday that was priced in, right? But still remarkable. The moves in the S&P are just wild, man. We actually made it. We were up about 10% from the low, 28.53. Let me post. My picture's not even posted. I'll post. 28.53 is the low in the S&P of last week, and we just traded up 284 points, just shy of 10% to 31.37, and then we've traded down like 57 points since then.
Pretty amazing. So, I'm just going to recap 1998 for a second, because this is what the difference is that could end up being problematic. So what happened in 1998, folks, okay, and this was the same playbook. They reduced by a half a point, 3:15 in the afternoon. In fact, Powell's going to have a press conference at 11 o'clock. The differential there was that the market had already been down for 6 straight weeks. And that turned the market. Now, this is a different ballgame, man. We're only at the beginning of this, so you better keep that in mind, because guess what? 6 weeks from now, they might have to do another one. Shocking odds. You know what I'm saying? So there's a difference in when they did it, and we'll see if this holds. The bottom line is that the 3,100 and the S&P right now is going to be an important number to keep your eye on, folks. Okay, right now you're up 21. This is anything under 3,100. Is a problem right now. And it's, for all general purposes, we're at 3,082. Well, that could be a 3,100 in a heartbeat. I mean, that's the other side of it. But pretty wild, man. Pretty wild.
I mean, what happens? What is the Fed day? What kind of a meeting does Jerome Powell have later today if this market still falls apart, right? That's a tough one.
That's right. And I'm sure that they probably talked about, right, what I said, that the last time they did this was after 6 weeks, that the market was really getting, it was getting like a razor blade every single day, down 1%, 2%, but after 6 weeks, okay, that turns into big money, folks. This particular case, this happened in a week. So we'll see where the baby shakes out. Gold caught the bid, as it should. But the bottom line is that if we go into zero interest rates, which is definitely higher probable today than it was yesterday. I mean, my take is we're going there anyway. But when you really talk about as to what the market in general, well, guess what? We're at 1.25 overnight rate. Gold is basically in its higher range again. Once it got over 16.19, you're at 16.26. So a lot of moving parts out here, man, no doubt. And
yeah, I mean, there were stories this morning in terms of New York City high school reportedly closing. Did you see that headline?
Yes, I did.
After a suspected coronavirus case? So those stories are going to persist. And I don't know how a 50 basis point cut gets to the fact if we have multiple schools closing. If we ever reach the level of Japan, you'd really see a reaction regardless of what they cut with.
No, there's no doubt. There's no doubt. And, it's very quick, because the bottom line is if they close one school, then it's like, okay, you got a school 8 blocks away, right? Let's say it's even a half mile away. What do you do with that school? I mean, you had friends, I had friends. We all have friends at different schools when you're growing up, right? It's like,
I agree.
After school, you're going out, having a good time. So it's all out there. That's the real bottom line. Let's go take a look at some of the higher volume stocks out here. So we're climbing up there again. We're at 3,095 right now. Some of the higher volume stocks we got. You got Bank of America is down 90 cents. You got Apple up $2. Tesla's up $38. Transocean is down 22. Oh, look at this rig. This is, folks, rig's going out of business. This is like pretty intense, man. So rig hit, look at that. It hit 286 last week. I took my eye off this thing, man. But this is pretty intense. This was an equity that traded $163 in 2008, and you're at $3, and it hit $2 and something last week. Look, this oil business is in tough shape, man. Look at this. They're bleeding money. They're taking $3.2 billion, but they're bleeding 86 cents per share. Wow.
Yeah. That's a tough chart for sure.
My God, it's pretty amazing actually when you think of the aspect of oil. Oil's hanging out here at 47.52. The S&P's just got on the other side of 3,100. So that's going to be the fight out here, the 3,100, folks. And what that is, I'll just put it up for you so you can see, that is the top of the range that we blew through in a heartbeat and then got back on the other side of it. So you can see it's just laying out there at that approximately 3,100. That 3,100 actually goes all the way back to, it's now 3,084 4 days ago. But that's the number to keep your eye on, because that's the battle line. If you were a fundamentalist, it'd be really hard to figure out, like, when is the cash flow going to come back, right? How much money. Like, let's say Microsoft says they're going to make so much money, or an industrial company. It's like, okay, what has happened, folks, is that they're just pulling guidance away. They're not saying what they're going to make because no one knows. I mean, it's like, okay, when's this going to fly?
There'll be winners and losers, for sure. Yeah. Just crazy, and that's where I think that's why you're seeing such crazy swings of 2% to 3%. I mean, before that rate cut, we just got an 80-point move up in the S&Ps. Then it went down 70 points, and now you're approaching 40 points up from there. Yeah.
And you got to remember something, folks, and this is what's pretty sad inside the S&Ps, too. If you're in the S&Ps, if you're on the right side of it and you had an order to sell before it popped, you're in great shape. Both sides of the market could have got hurt pretty bad there, the S&P. Meaning, because you get $50 a point, and let's put this up for a second. What you're going to see is that, most times people trading the S&Ps are going to have stops in. So it's like, okay, you get the stop on the top side, the stop on the bottom side, and you can see that they both get wiped out, right? In a move like this. That's the tough thing in general. Now, if you were long the S&Ps, and you had an order to sell, that's beautiful. And in fact, if you are day trading in a scenario like this, every time that you either sell or buy, you should have the other order out, inside, on a live order. You know?
Yeah. Because just you went up 2.7% in 5 minutes, you went down 2.3% in 15 minutes, and then you went up 1.2% in the next 10 minutes.
Exactly.
Yeah.
Right. So that's, it's important that you have those orders in, folks, because these spikes are going to continue, and I suspect at 11 o'clock when Powell starts to explain himself, we'll see where that's at. What's intriguing is that we haven't got word that any of the other central banks went down in the middle of the sessions. You know what I mean? I believe that at this point we're the only ones.
Yep.
Dow Industrials right now up $135, Nasdaq up 55, S&P's up 44. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 15, Nasdaq up 27, S&P's up 30. And so Target and Kohl's, we had some earnings come out, right?
We sure did. So pretty interesting, man. Target, they beat on earnings per share, $1.69 versus $1.65. Revenue, they missed by by 100 million, 23.4 versus 23.5 billion. They came in line in same-store sales, and it was just interesting the volatility they had. So the numbers came out early. It trades lower. You trade all the way up to 112 on the open, and targets dropped more than like $6 from that price level at 106.49 on that number. The earnings call beginning right at 9 o'clock, so it traded up for a half hour on that earnings call. But a drop-off, even with a 50 basis point cut target, falling apart a little bit there.
And then we get Kohl's, right?
We sure do. So Kohl's, a little bit of a flip side.
What's the symbol on Kohl's?
KSS.
Nice. Okay.
And we're up about 3.3%, 39.73. Now, it's interesting comparing the numbers. Back to target, 23 billion. They're growing at 1.5%. And you go over to the Kohl's numbers. Here's Kohl's earnings per share. They beat. It's a good quarter for sure. $1.99 versus $1.88. Net sales, $6.53 billion versus $6.52, and the same-store sales were flat versus they were looking for a drop. So it's just interesting that you have Kohl's, $6.5 billion in sales. They're expecting no growth, if not a little bit of growth, and they come in line with that, and you have Kohl's up like 3%, and Target trades lower on 1.5% growth, and $24 billion they're growing on almost.
Yeah, pretty amazing.
Yeah.
You know, like it's going to be like with this one, I was thinking, you know, you can make one side of the case that Amazon, you know, should be able to be doing pretty good on a case that people aren't going out shopping, right?
Yes.
Then I was thinking the other side of it, well, I guess they don't have that many people inside their warehouses. They still have a lot of, you know, robots that are doing the business. But when I really started looking, I says, man, you know what? They're all going to get hit because guess what? You're in the middle of Florida, like we got a big one near you, right?
Yes.
You know, and warehouse I'm talking about, folks. And it's like, okay, you know, for the amount of pay that people even got to, you know, will they start not showing up at work? You know, I mean, it's the whole thing's pretty wild, man.
It is, and you know, it's interesting, ironic, whatever you want to call it, that even today I've seen headlines, and I have it up here on my chart, that they expanded same-day delivery after bolstering its mini fulfillment centers. So they're bringing them to Philadelphia, Phoenix, Orlando's one, Dallas now have access to up to 3 million items the company's marked for same day. And that's part of that investment they made, $1.5 billion in the fourth quarter, expanding that service. I was surprised. I mean, I'm pretty certain Tampa has that. And it's interesting being in a city with the big warehouses, things roll out. You kind of assume it's probably more readily available than it is. But even Orlando didn't have access to something like that with them having such a big hub in Tampa. And so they're expanding, as we'll see if they can keep up with that. But they're growing.
No, there's no doubt, man. Let's go take a look at Netflix, okay? So, I mean, you know, the bottom line is that when you take a look at Netflix, look at this. It's holding up, man. I mean, this is where there's not a lot of equities that, you know, machines would be running on a continual basis. Netflix would be one of them, all right? You know, if you're trapped like rats, you know, you're at 384, last high is 392. This stock doesn't even look like we had a correction at all. That's interesting, man.
Yeah, I mean, it was charging higher when the market was trading lower some of last week.
Pretty well.
Yeah.
Tell you. And, you know, we'll see if what we have is that if we just put up the SPY for a second, folks, let's just see where we're at retracement-wise thus far from highs to lows. So there we go. We just made it over a 50% retracement. 50% on the SPY, the 50% retracement was 312. We hit 313.84. So the battle's going to be here. This is. Imagine that you go up 50% from the low in 2 days. From the high, you know what I'm saying?
Agreed,
from
man.
From the high to the low, you go up 50% in 2 days, folks. Wow.
Yeah. How about the app Robinhood? I don't have the app, the article up, but they are down yet again.
They are, huh?
Today, yes. And they had sent out emails saying that they would be up, and completely the system not available from what articles. I just saw it popping on CNBC.com as well.
It's pretty wild. If you're with Robinhood, folks, the bottom line, get over to TD Ameritrade. Robinhood made its name by zero commissions. I mean, they got a huge amount of traction, but now guess what? Every broker deal is zero commissions. Well, I don't know if everyone, but, it seems like
it does seem like
the business in general. That's pretty intense, man. That I suspect those chat rooms, Robinhood chat rooms, going out of their minds, man. Because
I would expect so.
Yeah.
Yeah.
Wow. And our man Dave White, he just put up. This is kind of interesting. It would make sense though. The home builders basically got a pop. Yeah, it would make sense. You got Lennar up 234. Because guess what, folks? The less expensive that money's getting, it makes a difference. It makes a huge difference in the aspect of what is the percentage of loan you can get to the percentage of value that you're making every week. And we're in a situation in the housing market that the supplies are really short. I mean, this is the first. It's so crazy. So picture, folks, we get a decent position in the in St. Petersburg in general, but there's nothing else to buy. I mean, there's plenty to buy, but the prices are right up there. So it's like there's no such thing as deals anymore. It's not even close.
And when you think about it, it feels. I'm just going to add to it. It feels like we've really come off the bottom in the markets, right? Things might be starting to get back to normal. Well, the 10-year is sitting at 1.098%. What was the all-time low? 1.32, right? So we're way away from even the all-time low. And I wouldn't say that points to like everything being restored if that was the case, right? Wouldn't yields be a lot higher?
There's no doubt that. And what Tommy's saying, folks, my take on it, I watch the bonds day and night because they have been the most consistent in the marketplace as to where rates are going to go. And guess what? If rates just continue to go down, we all don't know why that is in negative rates, but it can't be great. I don't
know how it ends.
Right.
That's it exactly. How does that go?
Yeah, I know. I mean, and if let's just look. I'm just curious. I'm sure that they went really negative. Well, there you go. They went not that well. Germany's 0.6% negative right now on the 10. France is 0.3. Switzerland's always been up there. That's 0.8. Netherlands is 0.4. Sweden's 0.3.
Yeah, just a wild world in terms of the amount of money, and I think that's why the moves are. That's just talking to friends, right? It said, the Dow went up 5% yesterday. Like that would take you 5 years of government treasuries to earn what you could have earned in one day of that bounce that we had yesterday.
Crazy, no doubt.
Yeah.
Dow right now up 75, Nasdaq's up 36, S&Ps are up 38. All we have to do is wait a few minutes, folks, and we'll have these babies. They go a lot higher, a lot lower. Tommy and I come right back, folks. Stay right there.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 108, NASDAQ up 52, S&P is up 42. And, it seems like the state of Washington right now is the one that is having some big trouble, with this virus and the spread of the virus and all of the above. They just coming across the tape. Even the Homeland Security just closed their Washington facility because one of their guys basically walked in after getting exposed. It's like,
unfortunate if that's the case. Yeah.
Yeah, it's like crazy, man. I mean, it's. I guess this is a time that if you're a medical worker, you really got to be careful, folks, because I don't know how they keep that under control with people just keep walking in, right? It's like, I guess
yes,
it is what it is.
Yeah. Now they have, since you mentioned it, there's I'm not sure where it is. I can find the country. I'll go back during the next break, but somewhere where you can actually phone for a testing kit, and they're telling you not to come in, and maybe that's the area we reach, and that then they'll be reimbursed for that testing kit. One country, maybe it's Switzerland. It might be Switzerland with Jay. I was having a conversation, but you can see that type of, my friends and I were commending it because that's exactly, you can't just bring everybody sick in together to actually allow people to get a testing kit that they could get sent to them or dropped off or however it worked. But yeah.
No doubt. So let's go over the gold market. The gold is hitting quite a bid right now, folks. Now, gold's up $48 right now. Look at this thing. Oh, man, I'm telling you. Markets, you got to love them. So, folks, we went down like almost $100 last Friday. We went down to $15.64. Well, there you go. We're at $16.42 right now. Oh, man. And I know, look at this, man. Look at that move. This is like crazy.
That was the same for the S&P's 2853 up to 3147 or something we just hit. So you're talking about 10%. If you put your money in at the lows of Thursday, you just made 10% on your money if you sold at that peak high we had on the spike at 10 o'clock this morning. Yeah.
And, this is going to be, rates, folks, the bottom line is they're in the metals market, and rates basically, are going to continue lower. Guess what? That's, a huge plus for any type of hard asset. That's how this thing shakes out, and that it's certainly putting juice underneath them because you blink, and if we go over to the gold bugs index, what you're going to see there, same setup, man. So the gold bugs index in 2 days went from 205 to 231. Oh, man. Wild.
Yeah.
Absolutely wild.
So how about today's Super Tuesday? It's remarkable how little we're talking about that because of what's going on with the coronavirus. Outside of the coronavirus going on, it would be on every single interview, news topic, CNBC, Bloomberg. 14 states voting that could decide the Democratic nomination of who would face off with Trump. I'm sure that would provide some real clarity over, is it Bernie? Is it Biden?
Yeah.
Could it be Bloomberg?
And Biden,
looks like
Biden has life after death. I mean,
it looks like Bernie versus Biden at this point.
And that's going to be a bloodbath. That's going to be.
It is, and I'm not even sure what happens. There's a lot of scenarios if nobody gets the required number of delegates, right, going into the convention.
Right.
Then you have that battle going on.
You have the superdelegates. The superdelegates can vote on the second ballot.
Okay.
And that's where they steal it from Bernie. Right. That's unfortunately that's what happened last time too. So, well, I'm saying I'm not picking a side here, folks, but the bottom line is that I suspect that's what's going to play out here. Well, I'm surprised that Bloomberg couldn't basically get more traction. Do you know what I mean? Right? It's
yeah, it just didn't happen.
Right.
And for whatever reason, but I hear you.
Yeah. So, and then, of course, on top of this, politic-wise, okay, the markets are going to be like, well, what are the markets going to be doing? Let's see, we're in the beginning of March. Yeah, so this is really going to be a question. Let me take a look at these transports again, because the airlines, of course, are one of the biggest hits out here. Okay, so I got a little traction today. So American is just flat. Bring this back. And these guys have gone bankrupt so many times, you can't bring American Airlines back too far, which is so, you know what I mean? Isn't it crazy? So it's like,
it especially seems crazy because now all the airlines make so much money, or at least they had.
Exactly. So American Airlines is at all-time lows right now on after the BK. 18, let's see, it's probably today.
You can't charge those bag fees on anybody if no one's flying.
My God, seriously, right. United, let's just take a look at United. They went BK too. Let me see if I can bring that back. Well, I can bring this back by a lot for this is interesting. Look at that. United. So United's trading 61. We're back to 2014. United looks like it's going to hold. That's going to be interesting because United at $52 is not bad. You're at 61. We hit 57 this week. So that's encouraging. I don't know. Because what should start happening, folks, is that if the market kind of looks at it and says, okay, we think this is going to be over in a month, 2 months or something, we should start seeing that, which is really cool in some of these equities. As to gaining some basically stability at lows and then maybe gaining some traction. What I've always got intrigued with, Tom, is that when something like this happens, that how does the market decipher it? Do you know what I mean?
Yeah.
And then you know after the fact, folks. You don't know when it's happening, but it's cool looking at it because you start seeing it. It was just like what happened is at the lows of 2008, Amazon was the first one off its low, but guess what? It was off its low 4 months before the whole market. And what that showed at the end, meaning not the end, is that Amazon was going to be one of the strongest stocks in the marketplace, which it proved to be. But 4 months is a long time before the fact to come off that low. Do you know what I'm saying?
Yeah.
And as we're speaking here, this is just a roller coaster. So the S&Ps are up 21 right now. So they just went down another, 13 or 14 points in about a heartbeat. This is like something else, man.
And just, I happen to have CNBC up, and so you have President Trump already out there at 10:15, 10:16 a.m. They have tweeting at Jay Powell and the Federal Reserve demanding more easing and cutting after the Fed slashed their rates. It's amusing. In one of a group chat I have going on, one of my friends said, "What happens? What does Trump do if the markets go down after they cut?" And they half jokingly, but it's amusing because it's true. Says he obviously comes out and starts raging that they should have cut a whole point, surprisingly, right? And that's basically what's going on.
No, I think one of the problems here is going to be that it was done so early. We'll find out, meaning, and we're only a week into this, you know. And as I said at the beginning of the show, at the Agent Contagion, they did it 6 weeks into it. And that took, and that, folks, the market didn't look back then from 1998 all the way to 2000. It never stopped, you know. Stay right there. Tommy and I are coming right back. We have the Dow right now down 47. Nasdaq's up 23. S&Ps are up 30. We're coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right down 42, Nasdaq up 14, S&P's up 26. And bottom line, folks, we will see just what Powell gets to say at 11 o'clock. I think it's, I mean, it's going to definitely keep the markets moving. I suspect.
Go ahead. What do you suspect?
I suspect one of the first questions is going to be, what are you going to do if the markets don't hold, right?
Yes. If that didn't do enough, what's your future plans, right? And I think he's going to be so strong with his language. Hopefully the market's pricing that in, because on the day that you come out and you 50 basis point surprise cut you had last week, why are you 50 basis point cutting? And what happens if, just like it did, we're now, a good 40 points still, S&P is off of the spike high that we got.
No, there's no doubt. And, then the folks are going to want to know that does throwing money at it, meaning less interest rate, will that do anything for the aspect of the markets. What it does do, folks, is this, is that there's plenty of corporate loans that are based off of the Fed fund futures rate. That's what does happen. So, like, Tommy, if you have a company, right, you know what I mean, and you get a loan out there, all of a sudden you're going to pay less money. So that's going to be immediate. There's no doubt about that. So.
And just one point where a friend made in the same, we were, again, just a group chat, one friend saying the same thing, right? It can't do anything. And one person made a mention that, you know, what it can do only is that, excuse me, after that destruction, it might help things come back a little bit quicker if there's some cheaper money out there, but it's not going to stop whatever is going to dent to the economy for that time.
No doubt. And, you know, we were talking about China yesterday, folks, what China had done, and we'll see how long this goes. China had done, they don't have to pay their bills for 6 months, companies.
Not bad, right?
Without defaulting.
I think, you know, I don't know if we'll go that drastic, but it's a great idea because it's a 6-month pause in the entire economy.
Right.
So, yeah.
Stay right there, folks. Think of Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave. Wait, be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.